markets are having a bit of a mixed reaction this morning as investors await the Fed's FOMC meeting with bated breath. Joining me to share his expectations of the Fed announcement and how the dollar is likely to perform is Greg Moore, FX strategist with TDS. Greg, looking at the Fed announcement and the potential taper decision, for many it seemed a foregone conclusion as markets had priced in perhaps a reduction of $10 billion from the bond buying scheme. However, recent data has suggested that the reduction might not be as sizable as first anticipated. The yen was hovering above the 100 mark ahead of the meeting, but how do you think it will perform against the US dollar moving forward?
For dollar yen, that plays into the dollar yen. I think essentially a lot of dovishness is already priced in to the Fed meeting this afternoon. You've seen the US dollar sell off against most of its currency, its G10 currency peers over the past 2 weeks, especially. The yen, to a much lesser extent, in fact, the dollar yen or the US dollar has held up quite well against the yen relative to other currencies. But I think overall the dollar just broadly could see a bid on the back of the FOMC statement and press conference this afternoon, just given the dovishness that's already priced in at this point.
Looking at the euro dollar, once tapering begins, we are going to find ourselves in a rate rising environment. Do you think this could be favourable to the euro?
For the euro dollar, that should underpin some weakness in the short term. In the medium and longer term, we're also more bearish on the pair, and I think the reasoning is essentially what you highlighted. It's a divergence of growth outlooks. We expect the U.S. to outperform the Eurozone quite notably over the next 2 years. And then the upshot of that is that the Fed policy should start to diverge a little bit from the ECB policy. The ECB has reiterated lately that their policy rate should be at or lower than it currently is for the foreseeable future. And the Fed is, as we'll see this afternoon, reducing accommodative policy. So I think the contrast in central bank policy should be a fairly key driver of a lower euro dollar in the coming months.
And lastly, perception of the sterling has changed considerably since the slew of more positive economic data. The Bank of England has also vowed to consider each data set in their attempts to achieve unemployment targets. The MPC meeting minutes highlighted the unanimous decision against adding stimulus in the UK, but what does the future have in store for the cable?
Sterling is a little bit more interesting than euro, I think, because the UK economy certainly has shown a little bit stronger signs of green shoots in the last few months. I think the BOE minutes that we saw overnight were a clear sign of that, acknowledging that activity has been stronger in the UK, and that their outlook for the rest of this year, at least, has improved. So the UK is actually looking a little bit better than the Eurozone, and I think that should see sterling outperform the euro. But when we compare sterling to the US dollar, I think it's a more similar story to euro dollar, where relative to the US, I think while the UK is certainly starting to look better, the US still should outperform the UK, and I think that should underpin again a little bit more divergent central bank policy. You mentioned the forward guidance that the BOE has begun to use with, in particular, the unemployment threshold that they've introduced, and that's sort of an interesting idea, I think, particularly considering the BOE is actually an inflation targeting central bank. So the idea of forward guidance focused partly on unemployment is a bit of a superficial measure, in that inflation is really in the end what their mandate is.
Greg, thank you so much for your time and perspective today. Well, viewers, that's all from me for the moment, but click back to Dukascopy TV tomorrow to get all the market reaction from the Fed's tapering decision. But for now, goodbye.